Joining us now to talk more about this morning's movers, we welcome Kari Firestone, Chair, CEO, and co-founder of Aureus Asset Management. She's also a CNBC contributor. Are you talking Cisco this morning?
We can talk Cisco.
What is there to say about Cisco? What do you think?
Well, you know, Cisco's on a comeback, and thank God for AI, because they can discuss AI a lot. You need routers for AI. I think that this is a company that had its heyday in the late 1990s.
Right.
And it did nothing for a decade and a half or 2 decades. So now they've got a whole new world. And I think Chuck Robbins pointed out on the call, which wasn't well understood, that the backlog is really growing. They've got a lot of opportunities.
And it's AI, you think? Just connect, connect the dots for me a little bit. Just kind of more demand for large
Correct.
Data
you need
systems.
more routers. You know, it's the chip plus routing, the information. There's just so much more. We're not an owner of this stock, but I see the appeal. And for people who have missed the big tech trade, you know, if you've missed the mega caps and some of the heavy movers, it's a place to go. And, you know, they're coming back. The chart also looks pretty good.
Decades. Decades.
It's really since
it was vying with GE for
Correct.
the market
Number
cap
one
dominance at $600 billion.
Wow.
20 years ago.
Yeah, exactly.
$200 billion today.
That's the peak. If you look at a 25-year chart, you can see it.
What was the little phone that they tried to sell? No, it wasn't a phone. It was like this little camera they tried
Cisco?
to sell. Do you remember?
No.
Like a flip thing. It was like the biggest fad for 2 years. Everyone was going out of their brains about it. And everyone was like, why are they even in this business?
Yeah.
And they were in this business because they wanted just to get more data over the internet lines.
This was when you
early pioneer.
When you use the word server, people thought you were smart by it, but I mean, that's so ubiquitous now. But it was, and I always used to ask the CEO. Remember, it was our friend John Chambers, and I always ask him, since I didn't really understand it that well, I go, can I get that in a like a pastel blue? So, what colors do the servers come in? I used to drive them. Great.
Pastel blue would look good with you.
With the server, for a nice server,
exactly.
right? I don't know what the hell it does.
Yeah.
But I'm looking at GE's market cap now, which, 123 billion. I mean, so to Cisco's credit, and I think we could show Oracle charts or similar, but we have seen it's not all just been Magnificent Seven. I mean, even some of the old tech names are kind of finding a way to reinvent themselves.
Yeah. Oracle, Microsoft.
I mean,
yeah.
I mean, this is a market where if you haven't been one of those mega caps, it's been a problem. But we need more participation. You can't just have those stocks lead the market indefinitely. That's why they have to take a pause right now.
Not poor intel. Kari, can you weigh in on our? You're an asset manager.
Yeah.
You have to buy bonds at some point.
Sure.
For diversity. For diversification.
We didn't have them for 10 years.
How long? Will you go 30 year for a portion of your portfolio?
We don't have any 30-year bonds.
10 year?
No. No. Right now we have 3 months, 6 months, 1 year, 5 to 7.
You have to kind of be stuck with a fixed return. Wouldn't a dividend stock can't you be smart enough to find a company that's going to increase its dividend over time so you're not stuck?
The S&P dividend yield is like 2%.
Yeah, but it's going up.
Terrible.
But it goes up. It goes up. You have a chance of if it goes up 15% a year, it'll double in every 4 or 5 years. You're in those 30-year bonds stuck at 4%.
I know. And then purchasing
You'll
power.
get your principal back, but that. What if we had Kari come on and said, Kari, we're just going to talk about the 30-year bond.
Great, can't
this
wait.
interview is over.
I can't wait. I think there's an appeal to if you can get 5% guaranteed for a few years, I think that's great.
But then you're stuck 2 years from now with, the stock market might move away from you, and you got to reinvest it in 2 years.
Yeah, but we don't have that much on the bond
That's
side.
what I mean.
Literally,
because
we have nothing. Nothing
She
for
wants
a
her
decade.
whole portfolio in there, so
Yeah, but it depends on the comfort level. Some people can't handle. They can't handle the tension. That's
the tension of the bond market, or they can't handle the tension of the stock market.
Yeah, they can't handle the tension and the volatility of the stock market.
There are some people who I know who very successfully bought bonds in the 80s. And lived off of them for many, many years and did way better than just about everybody else out there.
That's it. Like 8, 9, 10,
the lazy girl job. This is like the lazy girl.
And you can also buy zero coupon bonds. You buy zero coupon bonds that mature at par. You buy them for $200. The bond market moves, and they go from 200 to 350 in a year. So there's ways to make money. I'm not saying there's not, but
I want to hear more about them.
I actually did this for a while in real life.
Kari, here's a question for you. So let's say you were a little bit cautious on the market, like some of us, a little bit earlier this year, and you recognize, okay, well, it's moved sharply away from you. That everyone on the streets, was Joe saying that, now everyone on the streets piling in, they're getting bullish, they're raising their price targets, no recession, all the rest of it. do you start doing more? Do you look at that and go, ugh, okay, hey, maybe it's time to start, hedging more contingent,
Yeah.
You know what I'm saying?
Exactly.
So what does that look like?
Yeah, so the strategy we had, we were actually very positive on the market at the beginning of the year. I mean, we thought it was oversold, and we were buying stock last fall. We entered the year pretty heavily invested, and the stocks that we own are stocks that moved up, of course.
Did 4,400 surprise you, though? No?
No, I don't really think so. If we got 4.5% from the all-time peak. That felt a little rich. We sold some Apple a couple of months ago for a while. We didn't look smart with that trade. You can look at the market and say these stocks have moved 50 to 200%, and perhaps we should take some money off the table. If I had new money, would I put it into the tech trade, the communication services? Would I buy Meta this minute, or would I buy Salesforce this minute if we had new money? Not necessarily. That doesn't mean they're not great, but they can pause. 19 times earnings for.
What do you do with new money?
Yeah, right now, well, you can get, as you said, 4.5% to 5% in a money market fund right this minute. And there are an awful lot of names under the top that are 14
If you weren't talking about the October lows, then you're like in like the top 10%. You're in at least the top.
Oh, in terms of our calls this year, yeah.
Who said the market's going to do well? How many times do we hear about the October lows being oh, yeah, we got to retest the October lows?
Well, let's think about it.
Ad nauseum.
Once I think I came on and I said, all you hear if you're watching, CNBC or other networks about the market is that it's going to go down.
There are no other networks.
12 out of 13, correct. 12 out of 13 strategists at the end of the year said there would be a recession and the market was risky and you shouldn't touch it.
Right.
So, market timing is not what I think anyone is good at, but it certainly was a time where stocks were attractively priced. There were many stocks that were down 50%.
Right.
So isn't that what we're supposed to do? We're supposed to look at.
No, it looks very smart.